Videotape. To videotape.
What?
Videotape.
No.
All right. So we are live. Let me see. Okay, so it's Sunday, 10:40 a.m., June 21st. My name is Amal. I have Faisal and Austin on the call as well. Welcome to both of you, and first and foremost, happy Father's Day to all the fathers who are watching right now, and especially Austin as well.
Thank you, and likewise.
Yeah. Thank you guys so much for joining on such a pleasant day. I know you want to be doing more happier things on your Sunday Father's Day, but I think the markets have been really interesting to the last week, and I feel like the week ahead is also going to be quite a fascinating one because we have the quarterly end coming up. We have some rotations typically at the end of the quarter, and then we also started hearing potential sell-offs due to pensions. So what are your guys' thoughts? And, I want to hear from Austin first. First of all, how exactly did last week go? Did it meet your expectations? What are your thoughts?
Nothing really changed. It's a same old market. Had a pretty decent week, and historically, and primarily, most of the volume and most of the activity that we saw was primarily due to the quadruple witching, which means all the options of futures, stocks, whatever have you, they all expired on Friday. So last week was primarily pretty much driven by the squaring off of the option positions. But also historically, after June expiration, the following week is somewhat a corrective week as market makers reestablish new positions. So I'm expecting some sort of weakness going into next week.
Interesting. Faisal, what are your thoughts?
Yeah, it was a really interesting week last week. Exactly what Austin said about the quad expiration. That really, I think, may have tipped us a little bit over the cap as far as pulling back on Monday. But I'm still uncertain as far as how the market will digest all the new COVID information that we got this weekend, or some of the numbers that are upcoming, like the durable goods number, which is expected to be really important. It should be a really good reversal. And if it's not, I think that'll say something about people's savings and how comfortable they are with spending money on durable goods. But I don't know. This week is really, like last week was kind of a flatter week, but you had a lot of the COVID sector, a lot of the COVID stocks, whether it was gaming or biotech, they did awesome from the start to the finish. Software did awesome as well. We finally saw some momentum in Walmart and Target and the big retailers that had done very well beforehand. They're finally starting to pick it back up. And you also saw a lot of the bailout stocks, the airlines, the cruises, and the casinos start to come down a little bit. And I think based on where they closed Friday, they're really close to breaking down to the point where they could come down another 10 to 15%, in my opinion. We'll know definitely by Monday if they can hold their key support levels. I'm looking at Royal Caribbean for the cruises, United Airlines for the airlines, and then I think Las Vegas Sands for the casinos as kind of my leaders in that sector. But overall, I think you're going to see another week where you're going to have a bunch of these selective sectors go up. And I think it'll primarily be segmented towards if you have an advantage in the COVID environment or not. So once again, I think if you're someone who's thinking about investing in the market, I would not buy the index, because I think, as we saw last week with the Dow going down 200, but yet you still had a lot of these great software companies and big retail companies do well Friday, the indexes will get pulled down because I think those bailout stocks still have a lot of weight, especially Boeing. Still has a ton of weight on the indexes. So I would still be an individual stock picker for next week. I think you could still find upside opportunities, but it'll definitely be a shaky ride, I think, throughout the week.
Really great point about the coronavirus cases, because Friday we actually saw the highest global case count, recorded in a single day. And I think specifically Brazil and America saw the biggest spike in one individual day. Um, the other interesting thing that I find about COVID is something that I feel like we have to accept as a reality is this might be a rolling problem for the foreseeable future. I don't really see how we're going to get around something like this unless we have rolling lockdowns, unless we actually develop a vaccine or figure out some way how to deal with this, in a society to actually totally get rid of the virus. Because we're now in middle of June or almost at the end of June. The virus has been about 3 or 4 months, pretty pervasive throughout society, and has done a good amount of damage in lives pretty much in all countries, especially America, where we have, I think, 129 or 130,000 deaths. So even seeing something like China, which has some of the toughest lockdowns in the world, still see cases spike up in Beijing and Shanghai, and they actually had to go through another segment of rolling lockdowns. It's very hard to imagine that America won't have to deal with something a little bit more severe, almost similar to what we saw in March. What are your guys' thoughts on that?
I'll let Austin go first.
Well, what I'm paying attention to is not really the number of COVID cases, new cases, but the actual death rate. And as long as that count continues to go down, that's very positive. So in my opinion, what is going on is somehow our healthcare system has figured out a way to keep people alive. And as you look at the numbers, even though the COVID number of COVID cases are going up, the death rate continues to go down. To me, that is more important, that we are managing the situation until we are able to come out with some sort of vaccine and stuff. And that's what market is reacting to.
Yeah, that's a good point, because I was looking at the past 7-day data, so the 1 week data, and it doesn't necessarily seem like we're going down in deaths. It seems like we've flatlined right around that 700 per day figure, I think, which obviously is much better than we had a good month ago or so, or month and a half ago. So yeah, that's a great point. Another interesting point that I found, which more people are not paying attention to, is Apple was one of the first companies, even in March, to start closing down the retail stores. And yet again, they are the first ones to the front to start closing down their retail stores in 4 different states. Apple being such a big data-driven company, and they understand foot traffic data, they're probably seeing something that maybe governments and politicians or other companies are not seeing. What are your thoughts on that, Austin?
Well, the same old, that there's going to be a lot of hiccups as we reopen, and it's not going to be smooth sailing, and that's pretty much expected. And again, I'd say that as long as our death count does not shoot up, we will manage it. And I'll tell you honestly, this weekend when I was out and about, I mean, the bars were packed in Houston. Went to Home Depot, was packed, and people have been pretty much discounted, and they're doing things that they're used to doing.
See, I think that's the one thing that kind of scares me, is that I think the death count is a lagging indicator, right? I mean, you can't have deaths spike up unless the pervasiveness of the cases keep rising, which is already starting. So the tail of the cases is rising. The death count is almost imminent to rise. I mean, I don't see any other way how those two things cannot be tied hand in hand together, right? I mean, if you're starting to, so for example, Arizona had a ICU bed utilization of 85%, right? We obviously have not developed any new cure or proper therapies. In fact, we've actually gone the opposite way, where the FDA even said that we should not be recommending hydroxychloroquine, which is something that my father took when he was in the hospital. And even he himself mentioned to me that he felt really weird in his chest when he was taking this pill. So I don't know how we can make the argument that, okay, well, as long as the cases are going up, as long as the deaths are not going up, you're okay with the fact that the cases are going up, because I think the death count is obviously going to follow the cases because the mortality rate hasn't changed.
My argument is that, so reading some of the reports, I don't know, I'm not a healthcare professional, but what I'm understanding is that our healthcare system has figured out a way to manage this virus much better now than they did before. So that's why our death count rate, as you said, is flatlining. It's not spiking up, and there's continue to see primarily the major problem with as far as the virus is concerned among the seniors. The younger population seems to be managing much better.
Yeah. I was actually looking at the infection rate amongst what is it, 16 to 20-year-olds, or 16 to 22, or something like that. Those seem to be rising, in a pretty decent fashion too, which again was not really the case in March. But in either case, it seems like we're kind of establishing the fact that we are waiting to see if the death count is going to rise, and if that's the case, you're effectively saying that that's when the market will start reacting. Did I get that right, Austin?
Yeah, absolutely.
Okay,
Absolutely.
perfect. Faisal, did you want to add anything to that?
Yeah, I think overall, I'm more bullish on, even if we do see, as we're seeing right now, the rising case counts. As long as the economy does not shut down as it did before, which I think I think we're beyond past. I don't think we want to go back to that state to where there's that much economic stress. I believe people have moved beyond that. People have seen what it's like when they are restricted, when they're said they cannot go out. And at least speaking from American terms and Texas terms, people really just wanted to go out. And I think even as cases rise, I'm not seeing people's mentality change like I thought it would. It's not as fearful as it was, in mid-March or early May or early April. I'm sorry, but people have, in my opinion, I don't even think the vaccine is actually that big of a deal as much as I thought it was. And speaking of vaccine news, Moderna actually came out and said they hope to have some really good vaccine information as far as efficiency by Thanksgiving. So if things turn out really well by that time, we could maybe get a vaccine by early next year. But beyond that, I really don't think the timeline for the vaccine is as important to me as it was before. First of all, even if we do get a vaccine, I think there's a lot of skepticism that it's, quote, the right vaccine. I think people know that it's rushed. People know that there is a race to get to the finish line, become the first one to market. And I think people will be hesitant to take it. And even the ones that are restricting themselves because of COVID and not going outside, I don't even know if they're going to be the first ones to take it. They'll probably wait and see. So I think we've moved beyond that. We have to get to a place in our society where we can operate comfortably within this environment, whether it's everyone is mandatorily or has to wear a mask, or I mean, social distancing is kind of like a joke, honestly, but definitely at least the mask portion. People like are adapting to it and living with this virus. I can't even go to the grocery store and not find, or I'm sorry, and find Clorox bleach or any type of antibacterial spray at all. I've been 10 times the past like 3 weeks or something like that, and I still cannot find it. And so it just goes to show you people will live with this and they'll continue to kind of go back to their normal habits, but there are habits, or there are some habits that have changed, and I think that's going to be the notion going forward. Whether it's people not going to convenience stores or doing like that, doing more online shopping, there's people are finding ways to get their necessities and get things done in this new environment. And I think the fear that we had in March and April will not come back, even if cases rise.
Good point about the Moderna, potential on the vaccine by Thanksgiving, because I actually read from the Novartis CEO that they're expecting, or rather, they're not expecting a vaccine at least for a year and a half. And I think other prominent pharma companies are along the same lines, because their thought process is that this is a highly complex virus. The only thing that they've been able to even remotely figure out is the outer shell of the virus. They haven't even been able to sort of map out the internal, RNA process. So it seems like we are much farther away from even thinking about a vaccine. So when I start thinking about something like China going through lockdowns again, I don't see any way why a city like Houston should not go through a lockdown in the next 3 weeks. Those are my thoughts, because I don't know if Americans are going to be comfortable with the idea that they're going to effectively pose risk for other people or loved ones by simply going out. And I know the idea of wanting to keep the economy going is obviously, in terms of just raw numbers, is far more important. But I don't know how the politicians or the government or people are going to square off the fact that the numbers are rising, death count is undoubtedly probably going to follow as a tail, and a city like Houston, which is already seeing massive spikes in cases, and Texas as a whole, I would figure that in 3 weeks tops, we'd probably see more fear, kind of like March. So I guess in terms of a cynical standpoint, that's kind of how I'm looking at it. I don't think we've actually learned from our lesson in March, and I don't even think the idea of second wave can be talked about, because we haven't even gone through the worst of the first wave. Anyway,
I'll touch on that a little bit. I think there's one big difference between the first wave, and we could still be actually in the first wave. I don't disagree with that, but I'll just go ahead and reference this period as a second wave. This second wave, we have a lot more testing, and there's a lot more awareness as far as symptoms, how fast it can be. Like, the awareness itself is already within our minds. I think if people get sick in this day and age, the first thing that comes to mind is, do I have COVID? Do I have something like that? Like, if they have a dry cough, they're probably thinking, oh my gosh, there's a risk. And so now we have testing in place. And I think testing is such an underrated asset that we have now versus before. I mean, testing was so terrible before. Imagine thinking you have the symptoms, but you can't even get tested for it. You have to literally stay in your hole and figure out a way to either get tested or call the CDC and pay like $500 to get tested. So now, like, even myself, I've gone to get tested. Thank God I turned out negative. But I'm like, it was a very simple process, very easy process. And I think that's a very underrated thing. If we can detect the threats much earlier, I think then it's obvious that the death rate should, or at least, the death rate should end up either flatlining or maybe even hopefully coming down.
Fair point. Well, let's move on to the markets, right? So for now, obviously, like Austin said, we're not really seeing any negative impact on the market. However, he did mention that maybe the next week due to so many options. I think it was like 1.6 trillion in options. Is that what that was? Yeah, $1.6 trillion in options actually that closed out. So, pretty big week. And obviously we didn't see a whole lot of, movement upside or downside in the previous week. So it could be a very telling week ahead. Some of the questions that we have from the chat, Johnny B asked, what did the S&P futures tell us since the actual S&P 500 closed, which he thought was negative, but Faisal gave the impression Friday that it was somewhat of a positive week. Is that something that you kind of alluded to, Faisal? You said you thought it was somewhat of a positive week, or were you thinking it's?
So I think what he's mentioning is on Friday when the market closed, it closed at a standstill, of course, at 3:00. But then the futures sold off tremendously, and I believe that's what he's talking about. And
I think so. Yeah.
Yeah. As far as how that affected the overall week's close, I think for the most part, I was not really looking at short-term technicals because I knew that there would be a lot of volatility as far as all these options squaring off. But overall, I think from the momentum that I saw in the leaders and a lot of the strong sectors like high growth, which continue to show that the risk appetite is still there, which is very healthy for the market, in my opinion. There are a lot of positive signs in the market. And even though the technicals, especially the short-term technicals, may have closed at an ugly rate when you account for how the futures sold off after the close, I think, like I said before, it's still an uptrending secular market. You're going to have the Apples continue to make new highs, the Microsofts new highs. So it's going to be a week like that, but I'm not going to discount everything that's happening as far as the COVID cases rising. So I think once again, those sectors like the casinos and airlines that are largely affected by how people feel about COVID and going out and stuff, I think those sectors will drag down the market while the beneficiaries will pump up the market, and it'll be interesting to see if the market will be an aggregate up, down, or flat. So I think that's my overall sentiment for the week.
Perfect. Austin, any thoughts on this JP Morgan estimate about $170 billion, possible selling due to pensions? Have you paid attention to that? And if so, what are your thoughts?
Well, actually, the report that I read that was very interesting was that most of the pension plans are way behind in their estimates, and they're underfunded. So these guys need to, what was it, the California pension plan, which is a huge pension plan. I don't remember the number, but they said they will have to move up the scale to be aggressive in this market to hit their 7% target. What this means is they are saying that we're going to move a substantial amount of our capital into the tech area.
Wow.
So because they are so underfunded, and they will not be able to make their numbers as far as the payout is concerned. So this was very interesting. This is that they have decided to be more aggressive in this market, and I think that's a trend. Majority of the pension plans will not be able to meet their numbers, because the rates are so low, and opportunities to move money around are so limited, so unless the government comes and bails them out, which I don't think is going to happen, they're going to have to move up the scale.
So that effectively, I think I read a report from Zero Hedge about that. That would effectively mean that they would have to have a more, more leveraged positions in some of in particular portfolios of their pension, right? And so that creates even a higher risk environment. How do you sort of, when you read something like that, I mean, what does that indicate to you? And does that affect your optics on the market?
Oh, but back to the same thing. The markets go up or down on two things: interest rates and earnings. The interest rates are at historic almost close to zero. So there's a lot of liquidity in the market. And the numbers have been ratcheted down so much that numbers will likely go up as we move forward. You know, and if you look at the chart, there was a very interesting chart that I sent Faisal that showed that over the last 10 years, majority of the earnings growth, literally majority of the earnings growth will come from the tech sector. The chart showed that S&P minus tech was pretty much flatlining, and S&P tech was pretty much almost a hockey stick. You know, so to me, it tells me, well, like I've been saying, that you want to be a growth investor, you want to invest where the earnings are, and like Faisal said, even if in a choppy market, investors will continue to find growth stocks that have the ability to deliver top line and bottom line. And as you can see, you know, these tech stocks, these software stocks are on fire, and some of these COVID related tech stocks have just continue to, you know, hold up very, very strong. So that's my thinking. I'm an opportunist. You know, if they put these good tech stocks on sale, I'll be buyer. And can the market correct 5 to 10% over the next few weeks? Absolutely. I hope it does.
Yeah, fair point. Faisal, any thoughts on your end?
No, I think you guys hit the pension note perfectly.
Okay. One of my other thoughts that I want to talk about today, which is you know, my own research into an individual company, specifically Intel. I don't know if a lot of our members or viewers caught this news, but Jim Keller, who is actually, even when I was in college, he was, you know, one of the, I guess, one of the goats of the microprocessor, you know, engineering field. And a lot of people, I don't think, realize the kind of success that he has brought to the semi space. And so when you actually dig into his career, you'll realize that he has actually been profoundly impactful in the helping of success of a company like Intel, AMD, and even Tesla, because he actually helped Tesla's automated driving hardware side. He also helped AMD develop their Zen chip series, and then he helped Intel's x86 architecture chip series. So him leaving and resigning from Intel, in my opinion, is probably one big piece of news that most people are going to overlook. And over the last several years, I'm sure Faisal and Austin are aware that AMD has kind of been on the heels of Intel kind of chipping away at their market share. I figure this is a pretty big win for AMD. What are your guys' thoughts?
Yeah, I totally agree. And you know, I think when we look at stocks and you know, trade them and do this funny game, we forget that there are real people driving this real stock growth. And I think you hit it on the nail with when Intel loses someone like this, it really should see some damage, not only to the share price, but maybe even the company's foundation as far as competing with other companies that are super competitive and have extremely smart people in their company themselves. Like AMD has some of the best engineers at this point, and the fact that now their top competitor in the processing space is losing such a key leader, I think that really bodes well for AMD's competitiveness and their ability to continue to beat Intel as far as processing power and speed, and at least on that front.
Yeah. Any thoughts, Austin?
Yeah, same thing. I mean, you know, tech companies are all about innovation and new products. And I have not seen a whole lot of innovation coming out of Intel over the last few years or so. And quite to the contrary, AMD has been on fire as far as introducing new products and new architectures. I agree with Faisal that it's a big negative for Intel and positive for AMD.
Yeah. Um, another interesting thing that I was reading about Intel is they've had some serious managerial issues, and supposedly, there could have been rumors going around about Jim Keller leaving because of the managerial issues, as well as him not having the same kind of autonomy that he did back in the day with AMD. I think we attribute a lot of success to Lisa Su, the CEO of AMD, but what really sort of pulled them, out of the fire, in my opinion, was the early stages of Jim Keller and his design of how he saw the Zen chip architecture coming out in 2012, 13, all the way to I think like 2015, 16. And we actually have the Zen 3 chip coming out this fall, which supposedly by benchmark standards is going to absolutely demolish any Intel chip that's coming out by the end of this year. So I'm actually pretty bullish on AMD. Disclosure, I do have a small position on AMD. So make sure you guys, do your own research. Again, we're not providing financial advice, but we can tell you guys the companies that we're looking at, and obviously key pieces of information, like people like Jim Keller leaving Intel and what that means for companies like AMD. Let me see here. So let's see. Let's take some questions from the chat real quick. Any thoughts on oil and natural gas? Austin?
As far as energy is concerned, I'm a perennial bear on energy. I think long-term outlook for energy looks pretty dismal as they'll continue to lose market share to electric cars. I think over the next few years or so, you will see just unbelievable growth on the electric car side, and you will see autonomous trucks. And remember, majority of the energy, oil, especially oil, in this country is consumed by the transportation industry. So long-term outlook for energy looks pretty tough, actually. And I think the natural price for oil is somewhere around $16 to $18. So,
Yeah.
And the reason I say that is because for Saudis who are one of the largest producers, for them to get oil out of the ground is about $6 to $8.
And I think for Russia, it's fairly inexpensive as well, correct?
Yeah, and U.S. is very expensive, but the cost is coming down faster than I ever imagined. So as the cost comes down, they're going to produce more. The more oil on the market, less demand brings prices down. So I'm not a big believer in energy trade.
Yeah, fair point.
Unless it
I just wanted
unless the price goes down again, like negative number again.
Yeah. I actually thought it was interesting that JP Morgan Chase put out a projection that they see oil, or I guess, one of their analysts stated that they see oil somewhere back closer to $100, which, I mean, by today's standards sounds absolutely ridiculous, but crazier things have happened, obviously in 2020, and I don't know what the heck is going to go on with oil, but $100 just seemed a little too crazy for me.
I want to touch on the oil aspect because I actually I think oil is going to be in for a nice couple weeks, and actually I think the outlook for the next year or two is, I think I'm way more optimistic than most, and I totally agree with you guys on the long-term effects of solar energy and all this renewable energy, electric cars. I totally agree with that, and I think even during this this COVID cycle, for some reason, we've seen an uptick in electric cars and electric vehicles, and as that rate increases, I think the adoption rate will naturally go up as well. And But just to touch on oil, I think with all the infrastructure spending that not only the US is planning to do, but China is doing as well, I think that's really going to create a lot of surge in oil demand over the next 1 to 2 years that is really not being baked in right now. And I think as we lose a lot of those retail jobs for good, they will be largely made up by the infrastructure sector growth. And I think when you start to see growth in that entire industry, that naturally benefits to the demand in oil, at least for the next, in my opinion, 1 to 2 years. So with all the supply cuts that are going on, and there's so much uncertainty as far as how low supply can be, I I think oil could bounce up higher than I originally thought a month ago. Just seeing as where all the politics are playing out and just as far as demand. But I will say, if COVID increases and we get back to a point where people start to become restrictive again and not want to go out, that'll of course affect short-term demand. But for the next 1 to 2 years, I actually think it'll really surprise people.
Interesting. Yeah, those are great thoughts. Um, this is one question that I actually want to pick Austin's brain about. Uh, there's a question about SPACs. So SPACs are the special purpose acquisition companies, right? We've seen companies like Nikola Corporation, DraftKings. I don't know if DraftKings is on here. Yep, there it is. DraftKings. Let me see. Chamath Palihapitiya's two companies, which are Social Capital. I forgot what the tickers are. Any thoughts or insight on these special purpose acquisition companies in terms of how they're being utilized as investment vehicles? Austin?
I really have not done a whole lot of work in that space. It's interesting, but I really haven't. I don't have much better understanding of this SPAC at this point.
Okay, no problem. Faisal, do you have a grasp on how the SPAC investment vehicles are working?
No, not really. I'm sorry.
Yeah, I'm a little bit reserved in my knowledge too. Shane, so we'll do some research this week and we'll get back to you on that question. But that is a great question.
Yeah, sorry about that.
Yeah, no worries. So we'll talk about specifically though a company like Nikola, right? It's garnered a lot of attention. A lot of people are talking about it. It's almost had a 4 or 5x multiple in the last 2 or 3 months. When investors are looking at a company like Nikola, which doesn't necessarily have proper working products, they don't really have a good revenue stream. How does one look at a company like Nikola and gauge its potential future? And I want to ask Austin this question because I think when you've seen, let's just say, these whole host of companies come about in the last 10, 20 years, how did you look at, say, a company like Tesla, which had its IPO, or let me see, like Facebook, Twitter, well, not Amazon, but yeah, I'm sure you were obviously present for the Amazon IPO. How did you gauge and understand if these are good investments for the 5, 10, 15-year haul? And for investors who are looking at Nikola, what is kind of like a guideline or a criteria that you would tell them?
Well, first of all, I am a much more conservative investor than Faisal probably is. So I want to see. I'm never the first one to jump in when the story is still developing. I want to see, and if I do, it is just a total spec. And I'll take a flyer, and if I lose 50% of the money, I'm out. No question asked. And so that's the way I look at it. I want to see, initially when the idea is presented. I remember in 2008 during the internet boom, that all somebody had to say that I'm converting my cats and dog business into .com, and their stock went up fourfold. There were people that were crazy enough to throw money at it. people were coming out that, hey, I'm starting a company to develop websites, and their stock went from $2 to $100. So I've seen those movies before, and they, unfortunately, majority of them never have a very good ending. So I rather and remember, same thing with Amazon. Went up to what, $200, and then came down to what, $5 or $6 before they were able to intelligently put out their strategy as to what the company was all about and how they were going to grow their top line. Same thing with Tesla. So I always caution people to make sure you have a very good understanding of these new companies, and know your risk. And one thing I would add is, to all the people, listeners out there that are not savvy investors yet, please do not use margin. Do not use leverage, because that's the fastest way to losing all your money. So as you learn how to invest, be conservative, be cautious. There are plenty of opportunities in good companies that, even if you're wrong, short term, the long term looks very good. So that's how I look at it.
Faisal, can you explain, because Austin said he's a little bit more conservative in his trading and investments. You're a little bit more on the aggressive side. Do you mind explaining to us some of your criteria of how you go about evaluating companies? And how aggressive do you get when it comes to, let's just say, newer companies like Nikola, if at all you do invest in companies like this?
Yeah, well, I'm a super growth investor. I love growth stocks, and I think based on where we are in terms of the technology cycle, how technology can be implemented in society, I think we're living in a very amazing time for it. If you make technology and want to sell it, I think this is the best time in the history of the world. So I'm always looking at technology companies specifically for growth. I can usually find growth stocks in some retail companies or other sectors, but the majority of my time is focused on the healthcare and tech side, because that's just where the most innovation is. When it comes to a stock like Nikola, though, it's very I don't want to like completely degrade it, because obviously I can say it's jumped up so much, it's overvalued, it's just all hype. I mean, look at Tesla. Tesla is just has an extreme valuation, and I think they have very good products behind it. And so as long as they continue to innovate and push their products out and people keep buying them, it looks like the stock price is going to keep going up. That's what investors value, and it could be the same case for Nikola. I don't really know per se. I haven't done that much research on this stock itself, but I wouldn't be a short on this stock. That's for sure. I definitely won't buy it, but I'm not gonna short it, even though it may not reach any of the criteria that I'm looking for in a growth stock. It may just be completely overvalued and still have negative margins, negative earnings that are not expected to be positive in like 4 to 5 years or something, like, just the stuff that I don't want to touch. Even though it's probably like that, I'm not going to short it, because I'm not going to doubt how much investors are willing to buy risk assets for that could pay off 5 to 6 years down the line, because growth can explode in a year. Growth is exponential in this marketplace. So that's just kind of how I look at it. All growth is different. The key thing is you want to see sustainable growth. You want to see consistency. Every year they're getting better on both top line and bottom line. They're able to grow gross margins every single year. And their cash generation especially is, well, especially in the tech area, you should be able to see large operating cash flow that has resulted from little to declining capex sometimes. So that's some of the pieces that I look for as far as picking out my favorite growth stocks.
And I'll add my 2 cents. Every growth company goes through these cycles. Initially, there's when a company goes public, there's a hype, and people just throw money at these stocks ideas, and these stocks just go up, exponentially, and then reality sets in, and then the next phase is the people start to disbelieve in the story, and in the third stage, then they get disgusted and they say, hey, this is a dog, I'm never ever touching it again, and they sell it. At the fourth stage, you start to see some serious money come in and take that money from these guys. By that time, company has already gone through the initial phase, and now they're putting the real plan together as to how they are going to actually deliver numbers, and normally majority of the growth companies that have gone public have gone through the cycle, including Facebook. I don't remember. Facebook was not too long trading at $16, and when it first went IPO, it went up to what, 60 or 70 bucks. I don't remember exactly. And within 6 or 9 months, it was trading at 16. So there's plenty of opportunities to make money in growth companies. You don't always need to be the first one.
Yeah, fair point. Okay, well, we're going to end this part of the session where we discuss the macro perspectives on the market. If you want to learn and listen to our individual positioning, we're going to have this part of the session be only for our Advantage members. So I'm going to stop this session for now, and then we're just going to re-enter in our Zoom call, and this is where we're going to discuss individual positioning. Make sure you guys hit the thumbs up. Again, thanks everyone for joining. There's a free Discord link below. Y'all take care. Have a good rest of your Sunday. And we'll just continue this stream.